Hey, everybody. Welcome back to the Main Scoop. I'm Greg Lotko, SVP and General Manager for the Mainframe Software division here at Broadcom. I'm joined by Dan. I'll let him introduce himself in a moment. Today, we're going to be talking about, trends and directions in Fintech. Think about what's going on even in tech organizations that are in large banks. Talking about how these trends are impacting traditional financial institutions and how you tie that to the mainframe's value in addressing these trends, the digital transformations that are going on, and agility. So welcome back. Dan, introduce yourself and we can dive right in.
Yeah, hey everybody, Daniel Newman, founding partner, principal analyst at Futurum Research. Happy to be back here with you, Greg. It's almost as good to do these on Zoom or video as it is to do these in person. But sometimes the ability to get the great minds all together at one time is just easier done with all this digital transformation and technology here. So a topic near and dear to my heart, what's going on in the financial industry, Fintech, DeFi, and of course, the technology behind it, which I think is what we really want to get to here, is that there's some really important technology that powers all of this transformation and innovation that's going on. And boy, is there a lot going on in this space. But maybe we start off first that we've sort of hit this inflection point, Greg, this moment in the world. We've got inflation, we've got interest rate hikes, we've got broken supply chains, we've got the R word perhaps going on with recession, although I did see the definition on Wikipedia being updated yesterday, so I'm not sure we're in a recession. But overall, financial markets are in a bit of disarray, and I think barring the fact that we had a fairly decent week to end July, we had one of the worst starts in financial markets in history. So a lot going on here to sort of set the stage for a conversation on fintech.
Yeah, for sure. I mean, I got to tell you, I much prefer being in person, but I agree with you. It's much more important that we keep the conversation going, even if we have to do this in the virtual world. It is amazing what's going on. I mean, we were in heady days just a couple of quarters ago, right? I mean, with things going strong, despite the impacts that we had of the pandemic. And it's all this stuff that drives uncertainty, but it also drives opportunity. It drives the need to adjust to the environment, to react to it, and to create opportunistic opportunities to differentiate yourself relative to the competitors out there. There's increased competition. There's less money to go around, so everybody wants to get that share of the wallet, and they have to find ways to create revenue opportunities. I mean, beyond worrying about the R word, right? There's certainly, it doesn't matter what you call it. We see interest rates going up. We see mortgage rates going up. Housing sales are slowing. The prices that they're commanding is coming down. And that's really saying that businesses have to find new ways to differentiate themselves in the marketplace.
I heard another great podcast, a show called All In that I really like, and they said the winners of the next few years are going to be those that can compete on alpha. And so hopefully here on the Main Scoop, when we talk about technology, what I mean by alpha are those that pick the right investments, that are in the right categories, using the right technology, that are really truly differentiating. And fintech is a really interesting one because we've entered a generation of people who want banking but don't want banks. And so we've seen the banking industry who have for the longest time been able to sort of corner the market, corner debt, and help companies. And you own a home and you buy a car and you need a bank. Well, suddenly you can do a student loan without a bank. Suddenly you can buy a house without a bank. Suddenly
without the brick and mortar, without that common tie my accounts all
without
together.
even a banking charter.
Shop around and go and do the optimal financial engagement wherever. And that's also driven on lines by comfort and security and stability, how comfortable people feel interacting that way. But let's expand this conversation. Let's introduce, we have Joao Bezerra Leite joining us. Joao has more than 35 years of experience in the technology, payments, and banking industries in Brazil. He's served as managing director at Itau, Unibanco, where he held several executive positions. He holds a bachelor's degree in electronic engineering from the Instituto Mao de Tecnologia and extension courses from Columbia Business School, Wharton, Swiss Financial Institute, INSPIR, FGV, and Singularity University. I mean, he's gone to more schools than I attended classes, I think. Now, he's currently a fintech mentor and an investor and serves in several advisory boards. So, Joao, thank you for joining us today. Let's pull you into the conversation. You know, what's your perspective on all this? What are you seeing, kind of trends and directions and in these large tech organizations that you've interacted with?
Thank you very much, Greg. I know this, and I know I have been working for a bank for 36 years, so I'm sorry I could not shorten this bio. I didn't have time to shorten it to you, but no.
It's so impressive.
I guess it's I'm a man from technology, but we have to make this question: is why those banks exist? So banks exist to help to support development, financing, basically. But I always say that the business model of banks was designed for physical distribution of paper in a localized network of through buildings and islands, and then us from technology. Technology was then implemented to cement that tech structure in place. In fact, this business model is broken. So that's why we have so many fintechs in there.
So when you say it's broke, you think it's broke because nobody wants physical money anymore, or that there's not enough physical money in the world?
The problem is that when you talk about transformation, about digitalization, modernization, usually you are, in many cases, you are digitizing many secular processes. So I guess that happened in banks. We have make digital many of the old-fashioned process, and you have to, write this again from scratch. And I guess banks did not work there because what's the problem with the successful banks? The success. So they don't change. It's very difficult. And banks, they have
you get complacent, right? You think, hey, this model's been working for years. Why should I have to change? Are these startups really going to start making a dent? And by the time you start realizing they're making a dent, you're behind the 8 ball and you got to catch up, right?
That's right. So, technology helped, but technology is not helping anymore, because what we did was we grew to concentration, to acquisitions. Most of the banks, big banks, successful banks, and then they built these spaghetti banks. It's very difficult to rebuild. And now the banks, they are just coming up, the incumbents that are challenging those banks, they are kind of legal banks, legal, joined pieces.
Yeah.
So they are composable banks. It's much easier. So to remake these spaghetti banks is not easy. And technology is not ready because the banks they are flying. It's difficult to fix the banks during the flight.
It's interesting you're saying that. I moved to Texas, to Austin from Chicago, and I moved here, and I'd been a long time with one bank, and I won't mention any specifics because I don't want to get anyone in trouble, but let's just say it's one of the largest U.S. banks, not the largest, and it had grown through acquisition, exactly as you said. It had acquired, and it had acquired, and it had acquired, and there was no version of the bank that I was with Chicago, but then when I got here to Austin, which is a really fast-growing city here in the U.S., they acquired a bank that was very present here. And what you mentioned hits me so close to home, is that so they opened a bunch of branches that had the name of my old bank, but I had none of the technology. So when I was able to go there, they're like, yeah, we can deposit, withdrawal, but everything doesn't work. None of the systems are connected. And now we're a year later and the bank still has all these disparate systems. And I have things like where I've got a loan on a home and a business banking account, and I can't automatically have the bank draw the line. I need to actually withdraw money and pay the other account, even though it's all part of one company. And I think fintech companies have to be looking at this and saying, we can do this so much better. And you got to wonder about the big banks, why they're not trying to fix this faster, or is it even fixable?
Yes. Well, I guess what a second point that Daniel just mentioned is that is that banks, they have, it's very difficult for them to attack very personalized segments, some niche, because that fintechs is just fulfilling this space. Because fintechs, they are doing good, because they are spectacular in making some process frictionless. When the bank has no, maybe is not a priority for the bank, because it's so big that has many priorities that cannot do this. As for the fintechs, this segment is a survival point. It's different from a bank. So they are taking advantage of that. And then we have a fintech merging another fintech, and two spectacular things merge together. Then we have a third one, a fourth one. So what I'm seeing is that some fintechs are becoming larger than banks, because they have been able to build something much more composable than the banks. So it's much easier. So that's why transformation is so important in the banks. So it's about reimagining the process. Rewrite from the scratch. I don't know, because banks, they try to care, they think in the design by analogy, as I do, because I'm an engineer. I like to process better. But in some case, so to improve, to enhance the money moments. But the point is that if you get China, for instance, even in Brazil with the PIX, I say we do not care about the current money moments. I just have to use technology to make these money moments invisible. I don't care. So finance should be on the net. Finance should be invisible and be part of the. That's why we have this open bank that became open finance, and now it's becoming open everything, like open energy, open insurance, open health, and to reduce the information asymmetry. So I think banks have to rethink about everything, and not just about the banks, because I myself, I'm guilty of that, because I worked for a bank for 36 years. I wrote something that make you, Greg, and Dan, to enter in the bank the way I want, not the way you want. You come to the mobile, it doesn't matter if it's good or not, if it's frictionless, but you come towards a virtual door, the way I asked you to come. So, but I have to rewrite this, and I should not offer a product. I should just make it happen.
Yeah, and I feel it's about access points, right? I mean, it's not when you say rewrite or you re-architect or whatever, it's not about having to throw out everything that you had. It's the paradigm shift. It's the idea of the entry point and the access point to get to the data and to perform the function the way the customer or the user wants to, versus thinking the journey has to go through your systems in an order. It actually doesn't mean that you have to rewrite everything that you had. You just have to allow those access points, those interrupts, those APIs, and get to the data. And you're right. You can become a victim of thinking in your old paradigm or your own process, when it really should be about the data and the function that the end user or customer wants to perform. And there may be different things that they want to interact with, and different systems and entities that they want to share information across.
I guess, even fintechs and banks, they are now waking up and trying to understand they have to be partners, not competitors.
Yep.
Because fintechs, when they were on board, you're like, I'm going to kill banks. I will not respect your regulators, but this is very naive, So, but now banks and fintech should focus that the next 5 years going to have those everyday technology embedded experience.
Well, I think you've got a symbiotic relationship that's going to need to exist between banks and fintechs, and you're actually seeing some of the organizations and banks worldwide that'll probably have the biggest chance of being disruptive. You're seeing they're actually making lots of acquisitions with fintechs, or they are announcing strategic partnerships with fintechs. Things like how they're going to handle digital currency in the future. I don't think it's an if they're going to need to handle it. I think it's a pretty well understood that these companies and these banks will need to handle it, and those transactions and being able to deal with these blockchains. These are all things that they're going to have to deal with. And I think, Greg and Joao, we could spend a lot of time here, but for the main scoop, we always do want to come back to the critical technology. Now, you said early on you are a mainframer in more or less words. Let's talk about that, because at the core of almost every bank in the planet is are a lot of mainframes, and despite this is not going to change. This is not going to change. So talk about, from your experience, the way you see the world, talking to financial institutions all over the place. How is the mainframe's role evolving in this modern banking, financial institution, regulatory, and then, of course, disruptive fintech environment?
Right. Well, in fact, I think that most of the time when people think about the cloud, they think of replacing mainframe right away. So it's not like this. So we have evolving technology is not Big Bang. So even a brand new system becomes a legacy after the first very day in production, right? So I guess most of people, they confuse cloud with DevOps. So DevOps comes because you have to doing faster, doing in small sprints. I mean, to doing that with more quality. In some cases, if you come back to mainframe, you see the first virtual servers were mainframes. So you can do everything on mainframe if you want. But the problem is that most of people like fashionable technologies like cloud. And I guess when it comes to mainframe, when we went to banks, they have this large mainframe base that can be used for very specific things, and they can be connected to where cloud is really needed. The point is that in banks, large banks, they have so many priorities. They have to choose. If it has to choose for to move to the cloud in a large bank, I would choose the front end segments, and maybe the integration layer segments, and leave all those huge amounts of data to the mainframes. So that would be my choice. That was used to be my recommendation. The point that I have a problem is that many of the people that work in the architecture segment, they did not understand mainframes. So there is a gap of knowledge they have to fulfill again with people that understand mainframes, or maybe, and we don't you really, when you talk about mainframes, you do need much less people than we need for the cloud segment, because it's so pervasive, so dispersed, that you have too many people to develop it, to code, to control. And the mainframe world is, if you think that way, is much cheaper in some case if you really put this in the spreadsheet.
And cracking this code is really about having this conversation. I mean, of course, whenever the next new technology comes out, it's, sexy and everybody thinks this is the answer to everything. But having this conversation and then displaying with education, with working with customers as partners and showing them how you can open up the core mainframe environment, you can serve up that data, you can preserve those processes, you can use modern DevOps practices, and then leverage, whatever is the most current technology for its strength, whether it be in the front end or edge or cloud or whatever, connect it through and display. I mean, honestly, that's what the leading and most successful financial institutions are doing. They're leveraging their investments of the past. They're opening up and connecting not only to the new services and offerings that they can bring to market under their own brand, but connecting through to the fintechs. So bringing their kind of financials, their base, their reality and presence in the market, and tying it into those new ways of interaction. That's the marriage made in heaven.
I guess that most of those banks which have those large mainframe installations, they should really try to integrate this on the cloud, and really strategically focus the plans for migration, the efforts to the cloud on the front end and the integration layers. So because mainframes are not out of the game. So leave the core of the processing infra to the mainframe, is where it's needed high volumes of processing transactions and simplifying the monolith legacy systems. Leave there what's really needed for those huge amount of data. And also, if you have huge amounts of data that can't be left off-site for regulation reasons or whatever, you probably need to something that looks like a mainframe.
Yeah, and I mean, if you tie it all together, you kind of hit on it there. You've got the data issues, which require compliance, require data sovereignty, require data security. I mean, the resiliency, the scalability. There's a reason the mainframe is going to be in there, and we joked offline prior to the show. Companies will say we're going to replace it in the next 1 to 50 years. And the reason it keeps going out further and further from when the actual process is gone is because the cloud offers a lot of tremendous value in different businesses and enterprises, but there are specific workloads where to date, there just isn't a better approach when it comes to all those things: resiliency, scalability, security. And until there is, the mainframe will continue to be one of the critical components, especially in highly regulated industries. And so
that's easy for you to say, Dan.
It's easy for me to say. I practiced it all night. So, just kind of trying to summate, because, I think we're coming kind of to the end of our time here, but
yep.
You sort of reiterated. And so this is big challenge, though, is typically a lot of your fintech and DeFi come in very born on cloud. But as it gets closer to that highly regulated data, that privacy and compliance data, and then, of course, transacting, whether that's on a blockchain or whether that's on some other sort of transaction processing technology, as the money moves, because it's not cash, we need a system that does it very secure, tracks and traces, handles everything from security of a transaction to anti-money laundering, being able to implement things like AI on top. So much going on here. And to be short, as an analyst looking at the market, nothing better than the mainframe has been built. And
well, look, it's a constant across all technologies. You should be leveraging the best technology to perform a specific function. And then if you're bringing disparate technologies together, I mean, we can keep using car analogies. Maybe you're getting your brakes from this company, your transmission from this company, your tires from another. The ultimate result is how you integrate all those pieces and have them working in concert and communicating across, so that there's an awareness of the overall environment. And that's why you see these big companies still leveraging mainframes, but pulling in newer technologies, connecting them with fintechs, with cloud, whatever, with different interfaces, and that's how you get to the best of all worlds. So I agree. I think we're at the point where we need to wrap up. We said we were going to keep these to 20, 30 minutes. It's been a fabulous discussion. Thrilled to have you here, Joao. Dan, we covered a lot of ground. I mean, the only thing I think we missed on is the other financial resolution. At least in the US, we could all go out and buy a lottery ticket right now and have the wealth of a small nation if one of us would hit it. But, we'll leave that for another day. If you don't see any of us on the next session, it probably means we hit it big. Dan, I'll give it to you for final thoughts to wrap up.
Greg, even if I hit it big, I love what we do. I love this technology and this business. I think you awesome. And we would keep showing up. But having said that, there is so much change. We'd probably show up in a faster car. And we'd probably do these in person because we'd have a faster way to get to each other. And if we didn't, we would pay for it. But in the end, all of these transactions have to happen on something. None of this technology runs on air. I've said it many times before, semiconductors will eat the world. And then, of course, the software on top of them are what makes all experiences possible. In a world, by the way, where we just had the CHIPS Act pass, where we're going to see more investment in supply chain resiliency, we are in a place where digital technology is driving the world. And at the core of that are many financial institutions, including banking and fintech. And today's conversation, Greg, was really great. Joao was a super good guest. Excited to have him. And of course, if you're watching the show, excited to have you back. So hit that subscribe button. Join us here for more episodes of The Main Scoop. For Greg Lotko and myself, we got to say goodbye. Greg, let's say goodbye.
Awesome. Take care. Thank you, folks.